Bruce Berkowitz, founder and chief investment officer of Fairholme Capital Management, is one of the world's most successful investors. He has achieved one of the top track records in the industry by investing in only his best ideas. Absolutely nothing more. It takes guts to run a fund based on a philosophy that runs counter to a lot of conventional wisdom. For his remarkable ability to find alpha and make money for his shareholders over the long term, it's no wonder Bruce Berkowitz is Money Manager of the Year.
At Fairholme, we're very focused on price. Price matters most to us, and we think that price determines much of the success you're going to have in the future. So rather than predict what's going to happen with the company, we try to price it correctly with a large margin of safety. So pricing with a significant margin of safety is very important in our rule number one of not losing. Once we determine what a cheap price is, our next step is to look at the investment and the underlying company and stress test it to determine all the ways the business can go wrong, the environment can go wrong, the balance sheet can go wrong. Try to kill the company. If we can't kill the company and we're buying it at a price that reflects near death, we may be on to something very good. The next step in the Fairholme process is to search for catalysts, to understand how the environment, the ecosystem is going to change over time and how that's going to affect the company getting closer and closer to a, say, more normal return on investment or on capital employed. And that's the third part of the investment process. We could use, for example, a current investment, Bank of America. So 2008, the financial world almost comes to an end. Government comes to the rescue. Most investors have lost 80–90% of their investment in the company. So we're watching, we see how Bank of America is recapitalized. We see how their earnings power is maintained. In fact, the franchise is intact. But because of what just happened, the pain and suffering of so many, the diminution in value, the company is priced for death. But it has been restructured, recapitalized, and you can see through the business fundamentals and the quarterly earnings that the company's actually in better shape than probably it's been in the past 50 to 100 years. So here we have a situation priced for death, looks to have tremendous value, franchise intact, earnings power, foggy because of what just happened and the time that's going to be needed to resolve the sort of legacy issues from the last debacle. But you know, if you know business and you know banks, that the bad burns off, the good increases, you return to a normal, and the price follows it. And this is a good example of what we do and how we can invest $1 and eventually see that dollar become 2 and 4 and 6.